This PowerPoint presentation explains about the topic Behavioral Study of Investors Towards Commodity Market. Introduction to the commodity market. Any product that can be used for commerce or an article of commerce which is traded on an authorized commodity exchange is known as commodity. In current situation, all goods and products of agriculture, mineral and fossil organ are allowed for commodity trading, recognized under the FCRA. The National Commodity Exchange, recognized by the central government, permits commodities which includes precious and non-ferrous metals, cereals and pulses, ginned and unginned cotton, oilseeds, oil and oilcakes, raw jute and jute goods, sugar, potatoes and onions, coffee and tea, rubber and etc. Introduction about the topic. Behavioral finance is emerging as a new concept in the research area in recent times. This concept is presumed that information structured and characterized of capital market participants, individuals and retail investors systematically influence their own decision as well as market outcomes. In our country, the information content of the market and the change of economic climate systematically influences individual investors' decision as well as market outcomes. However, an investor investment decision in any one particular market, says commodity market, tend to rely highly on their behavioral derived from psychological principle of decision making. Therefore, a better understanding of behavioral process and outcome is important for financial planners because an undertaking of how investors generally respond to market movement will help investment advisor in deserving appropriate asset allocation strategies for their clients. Hence, the present article focuses on exploring the factor influencing the behavior of investor towards commodity market. Global classification of commodities, which is categorized as precious metal, other metals, agro-based commodities, petrochemicals, energy. Precious metal includes commodities like gold, silver, platinum, etc. Metals include commodities like nickel, aluminium, copper, zinc, etc. Agro-based commodities are wheat, rice, corn, cotton, oil seeds, oil, etc. Petrochemical products such as high-density polyethylene and polypropylene. Energies includes commodities like crude oil, natural gas, gasoline, etc. This slide shows the review of literature. Industry profile. Stock market in India. Stock exchanges are the preferred type of market for securities, whether the government and semi-government bodies or other public bodies, as also for shares and debentures issued by the joint stock companies. In the stock market, purchases and sales of shares are effected in commodity of free competition. Government securities are traded outside the trading ring in the form of over-the-country sale or purchase. The bargaining that are struck in the trading ring by the members of the stock exchange are the fairest price determined by the basic law of supply and demand. Multi-Commodity Exchange of India, MCX. MCX is an independent and demutualized exchange with permanent recognition from Government of India, having headquarters in Mumbai. Key shareholders of MCX are Financial Technologies Limited, State Bank of India, Union Bank of India, Corporation Bank of India, Bank of India and Canara Bank. MCX facilitates online trading, clearing and settlement operation for commodity futures market across the country. MCX started off trading in November 2003 and has built strategies alliance with Bombay Bullion Association, Bombay Metal Exchange, Solvent Extractor Association of India, Pulses Import Association. MCX deals with about 100 commodities. NCDEX. It is an online multi-commodity exchange that promoted in the year 2003 and professionally managed by the following institution: ICICI Bank Limited, Life Insurance Corporation of India, NABARD, NSC, PNB, Indian Farmers Fertilizer Corporation Limited, and Canara Bank. Statement of the problem is the commodity market in India has its effect on economic growth and development. The growth of commodity market is vital factor for country's economic growth, and trend in the market is defined by the decision of investor. It is important to explore behavioral factor influencing the decision of individual or retail investor. Further, an understanding of is much important for financial planners and market brokers because it would help them devise appropriate asset allocation strategy to their clients. Identifying factor playing an important role in determining the behavior of investor would affect the further policies and strategies of financial planner and market brokers as well as the government. Though there are many studies available sightseeing the behavior of investor towards equity market, similar studies on commodity market are scanty. The present research work is undertaken to fulfill the gap in this direction. Objective of the study. The primary objective of the study. The study is to study the behavior of investor towards commodity market at our organization. Secondary objectives. The secondary objective are to identify the factors which influence behavior of investors in the commodity market, to know the perception of investor toward commodity market, to find the attitude of investor on risk and return and purpose of investment. Scope of the study. The study helps to know about the performance and behavior of the investor and the most preferred invested commodity in the market. The study also focuses on Indian commodity market, its history and latest development in the country in commodity market. The study helps to find the attitude and preference of investor in the commodity market. This slide shows about the research methodology. Source of data. Primary data. The primary data were used for the study. The data have been collected through questionnaire method. Secondary data is collected from websites and journals. Type of research used for this study is descriptive, and the sampling method used for the study is non-probability convenient sampling. Sampling area for the study is Chennai, and the sample size is 150. The slide shows about the percentage analysis of the respondent, gender and their marital status. This slide shows the percentage analysis of the respondent age, income and occupation. This table explains the chi-square test between age of the investor and the previous experience of the investor. It is inferred that the above test shows that there is a relative significance between the age of the respondent and their previous experience in trading. This slide shows the chi-square test between the margin size, that is the capital of the investor, and the income of the investors. It is inferred that there is a relative significance between the income of the respondent and the margin size of the capital and of the investors. This is a chi-square test between frequency of trading, that is the trading frequent of the respondent and their occupation. Inference. The above test shows that there is a relative significance between the respondent occupation and their trading cycle in the commodity market. This table shows the correlation test. Inference. From the above table, it is inferred that correlation result positive correlation 0.489. The change in the variable will automatically affect the change in the other variable. Here the significant value is 0.00, which is less than 0.05. Hence, we regret the null hypothesis. This is another correlation test between the frequency of trading of the investor and the risk which they opt to take to obtain a good result. Inference. Correlation result positive correlation 0.0 0.365. The change in the variable would automatically affect change in other variable. Here the significant value is 0.000, which is less than 0.05. Hence we regret the null hypothesis. This slide shows the ANOVA test between frequency of trading and the occupation of the respondent. It is inferred that there is a significant association between respondent occupation and their frequency of trading. This ANOVA test shows the significant association between the respondent age and their preference to invest in the commodity. This slide shows the ranking table. Ranking of the commodities based on the preference of investors of the preference of investment of investors. Gold, which is ranked first, and cotton is the commodity which is ranked least in the table. Findings. From the study, it is found that 66.7% of the investors are male. It is found that majority of 51.3% of investors comes under the age group of 31 to 40, and 31% of investors comes under the age group of 25 to 30. Next, it is found that 52.7% of investors are unmarried. It is found that majority of 44% of respondent annual income is from 2 to 5 lakh, and 37.3% of respondent are private employees. 26.7% of investors are self-employed or does their own business. 21.3% of employees are government employed, and 14.7% of investors comes under other categories. It is found that about 62.67% of investors has their capital size below 5 lakh. It is found that 25.3% of investors are new to trading in commodity market, and majority of 37.7% of investors are trading in commodity market for about 5 to 10 years, and about 31.3% of respondents are trading in the commodity market for about 1 to 5 years. It is found that a majority of 38% of respondents prefer to invest only 25% of the saving as investment. 36.7% of respondents invest 50% from their saving. 20% of the respondents invest 75% of their saving, and less of 5.3% of respondents invest about 75% of their saving. It is found that a major factor influence the respondent to invest in commodity market is their friends and colleagues, 32%. Brokerage companies for 30.7%, media, which is for 23.3%, and other factors contributes to 14%. It is inferred that 94.7% of the respondents considered market study before investment is an important factor. It is found that 62% of the investors are risk neutral, 24.7% of investors are risk averse, and 13.3% of investors are risk loving. It is found that majority of 39.3% of investors prefer to invest in bullions, 22.7% of investors prefer agro-based commodity, 22% of investors prefer to invest in energy, and other 16% prefer to invest in basic metal. It is found that about 43.3% respondents choose to invest as it provided low risk and high return. 21.3% considered for tax benefit. 20.7% choose it to provide protection against inflation. Remaining 14.7% of respondents chosen it with considering the other benefits of it. It is found that 34.7% respondents think investing in commodity is best as it gives a profitable return. 17.3% for hedging, 27.3% for protection against inflation, and 20.7% for transparency in their process. It is found that majority of 33.3% does trading once in a week. 28.7% of investors trade many times a week. 23.3% of investors trade many times a week. It is found that majority of 45.3% of respondents gather effective information about the market from website and other, 22% from newspaper, 19.3% from financial companies, 13.3% from the broking companies. It is found that majority of 37% of investors expect a return from 5 to 25%. 26.7% of investors expect 26 to 50% of return. 23.3% of investors expect 51 to 75% of return, and 16% of investors expects about 75% of return from their investment. It is found that majority of 36.7% of investors considered investing in basic metals give more risk next to energy, which is about 28%, bullions, which is 22.7%, and agro-based commodities at the least of 12.7%. Through chi-square test, it is found that there is a significant association between the age of the respondent and the previous experience in trading. Through chi-square test, it is found that there is a significant association between the income of the respondent and their margin size, which is their capital. Chi-square test it is found that there is a significant association between the respondent occupation and the trading cycle in the commodity market. Through chi-square test, it is found that there is a significant association between income on their previous preference of investment in commodities. From the correlation test, it is found that the value of coefficient of correlation is positive. So it is inferred that there is a perfect correlation between previous experience of the investor in the commodities and the effective information collected by the respondent about the commodity market. From the correlation test, it is found that the value of the correlation of coefficient is positive. So it is inferred that there is a perfect correlation between the risk taken by the investor for obtaining good result and the frequency of trading. The value of F is 6.548 and P lesser than 0.05. It is inferred that there is a significant association between respondent occupation and the frequency of trading. Through the ANOVA test, it is inferred that there is a significant association between respondent age and preference to invest in their commodity. It is found that most of investors have ranked gold, that is bullions, as the first in their aspect of investment, return and risk, tax benefit, etc., and metals and energies have ranked next to it respectively. Suggestions: since investors prefer to invest in bullions and agricultural products, the broking company can create awareness among them to make investment in other commodity product. Since the major influencing factor to invest in commodity is friends and colleagues, the broking company can take steps to motivate their existing investor to make their investment also in commodities. The investor prefer to invest in commodities as it is highly profitable. So the broking firms can create awareness to the investor about other benefits of it. The investor use more of websites, internet to get the market information. Hence, brokers and broking firms can update their day-to-day trading activity to their investors. Conclusion: finally, the research concluded with investment behavior of investor and their attitude towards commodity market investment. That is, the different respondent consider the different factor to take their investment decision, particularly in commodities, commodity market investment, because it is having more both risk and return factor. Particularly, the bullions have more value and being traded in huge volume per day. If the respondent invests in these products, they can gain more profit. Long-term investments are highly suggestible than short-term investment, because long-term investment give a stable return for long time. Also, it will make the investor to increase their knowledge in commodities market product and it trends in directions.